Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi everyone, how you going? Welcome to the podcast. Thanks for joining us. And I'm conscious that the latter part of last year I was pretty busy across Momentum Media here, helping drive my role, which is the official title, which I don't really use that very often, but I am the executive editor of real estate and consumer wealth here at Momentum Media. Momentum Media is the company behind Smart Property Investment, and I guess my remit, just to give you some sense for it, is I cover all of our sort of wealth creation orientated products and those which are connected to real estate. So that includes real estate business, which is for Australia's residential sales sector, property management sector, so the business of real estate, number one. Number two, Smart Property Investment, which you're obviously all familiar about, which is helping Australians navigate the process of creating wealth through property. And also I work across a big brand called Nest Egg, and most of you would have heard of a Nest Egg before. Nest Egg is about creating this sort of pot of gold for your future, and we have a great product in nestegg.com.au. So my job is to help steer a content strategy across those different products here, and I get a real kick out of it, being part of a lot of people's journey creating wealth through property, and however they want to realize that or crystallize it. And what I've noticed after many years having conversations with property investors is that everyone's why is a little bit different. And I like to get into it to understand what makes people tick. And you'd be surprised when you chat with people who are embarking down a pathway of wealth creation. And I like to think you're doing that and you're tuning into this podcast. It's not very often you hear someone say, oh, I'm doing this because I want to drive a Ferrari or have a private jet, or, this sort of concept or context also of wealth for people largely isn't sort of positioned that way. And it's quite refreshing to know that. I think most people just want a better life. They want to have a happier life, have more time, and they're using property investment as a vehicle to do that, as well as other asset classes. I mean, cover that on nestegg.com.au. So go and check that out if you're building at a sort of more diversified portfolio. But that's what I do. And I've probably got one of the best jobs in Australia because I get to chat with people who are all doing that sort of stuff. And for my own education, it's a real benefit because I get to see and understand how other people think, and it helps shapes my views. I am better informed as a result of it, but it's my job to make sure that I have these conversations so you too can go down that pathway and have that same experience. So this is what we do at the Smart Property Investment Show in particular. It's one we're chatting about right now. And Investor Stories is what I like to have a discussion around. So later part of last year, I was running around a bit. You would have heard some of my colleagues here, Maya, for example, jumping in to help when I am not available to record the podcast. Expect to see more of Maya. She's a great content professional, a great journalist, and she's producing some great stuff across smartpropertyinvestment.com.au. So go and check it out, and we'll get her on the show as well moving forward so you can hear more from her. But today, Investor Stories, pathway into property, how one investor kicked off investing in property outside of Australia, but then started building out his own portfolio here, left his job in IT, and now is realising his dream, literally through investors' dream, supporting other Australians make and create wealth through property. Sanjeev Sah, he's in a studio with me. Sanjeev, how's things, mate? You good?
No, very good. Thank you, Flip.
Well, thank you for your patience with my long-winded introduction to actually get to the point where we're going to chat about today. But, people are always asking me, Sanjeev, exactly what I do. And I really struggle if I meet people at a barbecue. They go, what do you do, Phil? I go, I don't really know. I mean, it's sort of, the latest thing is I'm in broadcasting, right? I mean, podcasting, and I essentially just navigate chats with people, and it's pretty cool because I get a real kick out of it, hearing these stories firsthand, and Sanjeev will be testament to this. There's been probably a bad thing to say, but there's been really no background work into this discussion. It's just the first time I've met you. We're just going to have a chat about what's going on in property. So it allows me to be really curious.
Yeah, good to see you, Flip.
Yeah, it's good. So today you're a property professional, but prior to that, you were a property investor, but you're still probably a property investor today. So let's start off as Sanjeev, the property investor. Are you a property investor?
100%.
100%. You wear that like a badge of honor?
Yes, definitely.
So tell me about kicking off in property. Why have you chosen this as an asset class to invest in?
I don't know. I think it all started. I was in India, started a job in big country, in a big city, and used to rent there, and always used to wonder, oh my God, because the rent I used to pay was equivalent to my salary. And of course, we were sharing with friends, and I always used to fascinate that the owner must be a very rich person, and it's so good way. And after a couple of years, I came to Australia. So this was back in 2007. I was already living my dream life, especially coming from India. It was a good change, good work, and very soon I got absorbed in the local market. So, and then got married. Wife also got job. We started good saving, living in Parramatta in a 1-bedroom unit, having a good life. And then we started buying in India because we thought, okay, let's buy, safeguard our back home so that everyone buy property. Started buying. So we bought first residential 3-bedroom unit. And this was in 2009. And literally in 1.5 years, we paid off. It was around, I would say it's $50,000 Australian dollar. So that was the investment, right? And after 2 years, we bought a commercial property. And that time still I was living in Parramatta. I never used to think buy in Sydney because oh wow, you're buying for 700-800K apartment, doesn't make sense. Renting is cheaper. But then we bought another commercial in India for around 100K Australian dollars, which again we paid off in 2 years. And now both are doubled in value in 10 years time. So that was the thing. And used to think okay, now if I go back home, I have a residential property paid off and a commercial which is giving me around good income, again paid off. It's pretty good life, right? I can do whatever I want to do with my time. Those kind of feelings were coming. But then I said, Australia is good. I wish I could do the same here in Australia. That will be amazing because then I can really live a good life. At the same time, I spend more time with parents because I have to go back, right? Because my parents are not going to live here. So those things were happening, and now going to seminars Amway kind of thing where they're talking about passive income, and I said, wow, that's good. So no wonder I'm working hard, I'm not getting there. And so those things, and what happened is until 2012 and these things sorted out, and 2014 we bought our first property for our PPR in Penrith, which was a house land package. And that price was going up. And then we moved on in 15. But same year, at that time, I bought a unit in Penrith itself for $351, which was a first release, not educated. And that was after 6 months when they had the official release, they were selling the same for $420. And I said, wow, 6 months, $70,000, that's a couple of years of my savings. That changed my mind. And I said, wow, looks like I can do the same here in Australia as well, what I've done in India. And started looking to learn this one in deep dive. And my own PPR was going up in value every single day because it was next to Westfield, good location. And luckily, I always watch my numbers. So that was around 614K, a good house land package, 4-bedroom house near to the station in Penrith, where we still live. And that's where I started learning, going to a lot of seminars, meeting people, really following other successful investors. And took a lot of inspiration, and that's where I heavily invested in my self-education. So from that point, from end of 15, now I think I've invested around 150K in self-education.
Wow.
So Tony Robbins, whatever, if you talk about a lot of all the property communities we have in Australia, I think I'm part of that. So really learning. And then my first deal after all the education was learning from other people was a land subdivision deal in 16 in Lithgow area. So that time my wife, we just had a baby, so we didn't have the serviceability. So I said, now I know a lot of things, I just want to do it. And that's where I did a joint venture. I found a friend and said, let's do a deal and I'll do all the work. And that's where I started that one. So that subdivision went well. Luckily, we got then in $2,000 because all the work was done and we all had to do a paper flip. And then, so that's where I started. And the subdivision was good. And then I got one piece of land and my friend got the another one. He sold after a year, actually. So each part of the land cost us $50,000. After we bought for $85,000. It's around Lithgow area. And that gave me like really another confidence that, even I can do subdivision. And my goal was like, okay, I want to do a smaller deals, learn the process, and money will flow through. I mean, it will come. But our focus was not on the money, like learn the process and really back myself as well, because big numbers means if something goes wrong.
Yeah, absolutely. So that was 2016 in Lithgow. Now, have you done anything subsequent to that?
Yeah.
After Lithgow property? Okay.
Yeah.
All right. So much here, Sanjeev. Really interesting story. And you can see this sort of journey playing out. And we'll pick up that. I really want to drill down into that Lithgow property and properties subsequent to that. But sort of kicking off the start of this story, investing initially in India. I just want to sort of break that down. We'll just go to break beforehand, back in a moment.
Are you struggling to invest in property this year and need help buying? Then you need to book in a consultation with Investor's Dream and let us do the hard work for you. Don't fall victim to missing out on incredible deals like everyone else. Lock in a meeting today. Go to investorsdream.com.au and secure your financial freedom today.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Sanjeev Sah, investor. What brought you out to Australia originally? What's the backstory?
So I did my engineering, worked in India for 2.5 years, and then my company sent me to, on a work visa for a 6-month project. And you ended up here in Australia? Yeah.
Yeah.
So
what sort of engineering work did you do?
Computer engineering.
Okay, so you studied in India, obviously.
Yeah.
Whereabouts? Where did you grow up?
So I grew up in Ranchi. It's the capital of Jharkhand.
Okay.
Dhoni comes from, if you follow cricket.
Yeah.
And I did my engineering in South.
Okay.
In Bangalore, so near to Bangalore.
Okay, and then you went and got a job and
yes,
must have done quite well if they went, we want to send you out to Australia for 6 months secondment.
Yeah, so it was good. Like generally a lot of developers come. So I was like more Java developer doing IT job. And they had a project for like Census, which is part of Telstra in Melbourne.
Yeah.
So I came for 6 months. That went for 2 years. And then my boss liked me and he said, okay, let's
see if we can keep you around.
Yeah, keep you around, yeah.
What was your first impression of Australia when you arrived?
I think it was good because I was listening, like people go to foreign and it was more of a dream. And it was good. Like I came and I think I remember like I was living in Melbourne and after 3 months, one day I really woke up and I said, what's happening to the city? Is like there is no car, anyone is horning, right? Because in India, wherever you go, like a lot of horns and all. I was like, really, I'm living in a city or something, or there is no car in Melbourne. so
it's just quiet,
It's quiet.
So you enjoyed the work?
I enjoyed the work.
What did you sort of think of the Australian way of life? Was it like, you must have been attracted to it because you're here still, right?
Yeah, exactly. No, it was really good. I think I saw like all kind of things and really good life and quality life, I would say.
Yeah. And did you meet your wife here? Well, now wife, did you meet her here in Australia or did you know her from back at home?
No, so we got married in India and so this was like in 9, so that was another good story. So I found my wife through a matrimonial site. Okay. So in India, it's very common. Yeah. Like a lot of people, they post there and then it's like some people say it's like Australian Tinder, but no, it's not. It's like more you put your profile and serious, like looking for getting married and all. So that's where I found my wife and we started chatting, talking. Yeah. And then I said, I'm overseas anyway, so let's get our parents meet each other and see the family and all. Yeah. And so that's the process. Yeah,
that's a great story. And was she from a similar area to you in India or for somewhere completely separate?
Different estate, yeah. So it's like an overnight journey by train, bus, or 2 hours in flight. Yeah. So,
So everyone must have got on. You got married, which is great. And and then you brought her out to Australia. Where were you living at the time? In Melbourne or were you living in Sydney by then?
In Sydney, yeah. I live in Penrith,
Yeah. Was it a culture shock for her to come out and say, whoa, here we go. This is pretty interesting.
Yeah, I think she did her MBA in HR. Okay. She was living in a big city in Pune, so she was not. But definitely after marriage, it was different life, new country. So for her, it was a little bit of change. But we settled, I think, and then after 6 months or so, she started looking for work and all. And as usual, started with the volunteering job and settled.
Doing everything. What's how does the attitude differ between, this all stuff always intrigues me, between Australia and India in relation to like wealth creation, as in, you and your wife have gone, hey, let's think about our future. Let's try and, create something, create wealth. Yeah. Is that pretty consistent with sort of the way Indians see it as well?
Not necessarily. I mean, I see like definitely Indians have good saving habits. Like say if you earn $100, then you try to save as much as possible and no thing. But wealth creation, no, I think I haven't seen anywhere in the world. Like I'm being part of a lot of communities and all, like it's same thing. And it's come back to the education system. Everyone teaches us, work hard for money. So like wealth creation is like out of the game unless you have got a good surrounding, someone has teach you or like, good parents. And that's what we learn and trying to be, so that it's not just about us, but we can help our kids, surrounding people.
Yeah.
That what it is.
Yeah. Most cultures have different relationships with or attitudes towards money and wealth creation. And that's sort of, in Australia, there's sort of festers itself in that most people want to buy a property, right? They want to, you've heard of the Great Australian Dream, right? You have a house to live in, white picket fence, all that sort of stuff. That's changing quite a lot, but it's inherently still the way it is. So you went down a pathway of, I guess, a bit of a thinking about the future and maybe de-risking, saying, hey, let's set ourselves up with property in India first and then think about Australia second. Was that always the strategy, or was it you didn't worry about Australia second? It was like, let's buy in India first. That's where we know. And if for whatever reason we end up back there, we're pretty much set up. Was it a deliberate thing to say that's number one and then buying Australian properties number two?
No, I think the India thing just started because like we are not sure we're going to live here for long or something, how the life will be. And like because we had the money, so it's like, let's buy in India. We never thought of settling in Australia as such, or maybe it's just married and But it's like, okay, so that if something happens, we go home, then at least we have something.
Yeah.
So no planning, and that's why like literally buying in cash. So it's like one of the dumb things I've done. And 5 years gone, all the hard money, no leverage. And but like from 2015 when I started learning and doing the right way, it's now I've got 5 properties with 3 development sites. Game change in 5 years. And
it's a huge shift from buying in cash and, depositing cash and paying off a mortgage. Did you have a mortgage on them in India?
No.
So you just paid cash. So cash.
Yeah. So it's
And I think you mentioned the first one was a 3-bedroom unit, 50K Aussie, and then your commercial premise is 100K. Like, how do you sort of get to grips with thinking, I can buy a 3-bedroom unit with $50,000 here, if the same unit in Penrith? Same thing. 3-bedroom unit in Penrith is like it's probably 8 times as much, right? Like, how do you even comprehend that? Like, it's strange, isn't it?
Yeah, it's just the money value, right? I mean, so it's like for $1, it's 50 rupees more or less right now. So it's just the currency conversion. I mean, it's expensive for India.
Yeah.
So it is in a nice place and all the stuff. So it's just.
Yeah, well, it's good that you've got those assets paid off in India, debt free, and I guess it's a nice thing. How do you manage those properties back in India? Who sort of knocks on the door? Does someone knock on the door and collect the rent in cash, or how does it work?
No, so the apartment we have kept like my parents are living.
Okay,
so that will be our family place. Even my dad has got his own place, but it's just a nicer place and better thing. And the commercial is like I've given to my elder brother. He has got a couple of properties, a business. So he said, Sanjeev, give it to me, and he pays me rent. So that is like $400 or $500 every month. So that's like I use for my India trip with my wife. And so that's all covered, all of our expenses, flight tickets and everything. So, yeah.
And in a normal non-COVID environment, how often would you get back to India a year? Would you like to get back to India a year?
Yeah, I think, and that's where that was another why for me. Because I was like going 2 years, and in between, parents were also coming because we want to show them Australia too. But it was more, and that's what like was my one of the why that I'm working hard in job. It's all good, money is good. I'll become like a senior manager, director, and a VP one day if I want to. But like I'm time poor, so what do I do with this money? I want is like a good quality life, and like not stress and running around for what. So that's like I started realizing, and that never inspired me. And I said, it's really good people, but not for me, because
it must be such a different environment here. Sort of, I guess, from a financial point of view, living in Sydney compared to your family back in India. Do they sort of have a look at property prices here and just go, that's just mind-blowingly expensive? You know, there's just the paradigm of how they view something. They just go, well, that's just crazy.
True. Yeah.
Yeah.
Like I remember, it's a good point. Like when in India, between like someone asking, "What is your price of your house?" And it's like it's $1 million now, right? More or less in Penrith where we live.
Yeah.
So it's like if they convert in Indian currency, think about that $50,000. It still is good money, and now 1 million is like, wow, do you have that big house? So it's like, yeah, a different world.
It is a completely different world, and I guess it's just contextual, isn't it? They're very different markets. And and you mentioned your first property you purchased in Australia was your principal place of residence at PPR. Is that in Penrith proper or one of the suburbs around Penrith?
In Penrith. So it's literally on the station. It's a new established, like literally walking 5 minutes from the station.
Oh, is it? Yeah.
Yeah, it's called Thornton. It's a small community. I think they started developing, I think 2012, 13.
Yeah. That's pretty good. We bought a place in Penrith. It was Cambridge Park, which you'll know where it is. Oh, it's going to be 2012 or 13. They were done really well. There was good buying back then. But so that's your principal place residence. You still live there now. Yeah. You bought it for what, 614, did you?
Yeah, 614.
And what do you think sort of value now would be on that?
I think 950.
Okay. So that's not bad over 7 years, 950. So have you touched that in terms of extracting any of the equity in that in order to support other buying? To tell us about that.
So I think right now we have got is around how much? Around 650 loan on that. So of course I've taken out and I think when I bought it, I bought with 97%. So what happened is, that's another story. Like I had $50,000 because I was buying in India. So like I said, now I've got $50,000, 10%, I'll buy one. Easy. And this one was a new, well-established, good location for me. It was like going to city. So like at least I don't have to take the car in the morning. So it was a big thing. Yeah. Walking to the station. So the valuation came as 560.
Okay.
So my 50,000 gone there. So now I have to make a decision, like either you don't buy and or you pay the LMI and get it done. So literally I paid $22,000 LMI on that and 97%. And I said, okay, I'll buy it.
And was the lender happy with that? They were right, sort of?
Yeah.
Yeah. Okay, this is really interesting dynamic. And let's just sort of break that down a little bit. So the purchase price of this property was 614.
Yep.
As in, that was what you signed the contract for? It's a brand new place, was it? No,
yep.
3-bedroom, 4-bedroom?
4-bedroom, double-story house.
4-bedroom, like the sort of house you would expect, 2 stories on a block of land, new build, $614,000. But when you actually went to the bank and said, give me a valuation on it. So it was already built. You didn't build it. It was already built.
No. Okay. So it was just 2 contracts, one for the land, one the house. And like first thing was the valuation after the land settlement.
Yep.
I think, before the land settlement, the valuation happened. And because it was a new area, all was like selling for, was like in Penrith, like 400-500K.
Yeah.
And now this is the best location you can think of, but nothing has settled. So it's like, it was all done with the land lease. And it's like land lease, yes.
Yeah, land lease, yeah.
And the valuation came because nothing has settled. The bank compares last 6 months, right? So that's where the struggle was. So
this is the challenge with valuations, and you see this a lot in sort of new build suburbs, house and land type stuff. So you contracted for 614, but the bank said that place is only worth 560.
True.
So how did you feel about that? Did you go, no, it's got to be worth more than that, or I've invested into this now, I need to stick with this? That's a pretty big gap. That's like a $54,000 gap between what you contracted for and what you're paying for it. So all your deposits just gone.
Yeah.
Was it a hard decision to stick with it?
I think it was a little hard, but I was knowing because I was looking from last 6 months, I think. And I think I was looking for an apartment, and I was lucky. At least I went to that path. And I was knowing like this is a good house and everything, and the value will appreciate. And I started learning that why the bank is giving this. So I understood the challenge.
Yeah.
If I had not understood, it would have been really hard decision because like 54,000, like why less? It doesn't worth, right? But I understood like why, because the values are less, and like a couple of settlement has to happen so that the bank can see and tally. But I was knowing that it'll go up, and I have no choice because like literally for 600. I can't buy anywhere, brand new, something which I love. Walking to the station, literally impossible in a good location.
Yeah.
So
there's a backstory to it all, and that sort of makes sense. But if you had to sell that immediately, you would have realised your loss. However, you didn't have to sell that immediately. Therefore, it might be a paper loss, but it's not a realised loss.
Yeah.
Now, benefit of hindsight, 7 years later, it's worth $950,000. So you're ahead of the game, right? So cash flow must have been, an important component of this. And no doubt the lender was happy with your ability to service the debt on the property. Yeah. And this is when you're working in IT, obviously?
Yeah.
Okay. 22K in LMI. Now, that's a big whack, a big tax to pay, but it's not really a tax to pay. It's been an enabler for you, no doubt. So LMI is lender's mortgage insurance. So this is when you borrow more than 80% of the value of the asset, the property, the LVR, loan to value ratio. This is an insurance that insures the lender against you defaulting on the property. So this doesn't insure your house at all. Go to smartpropertyinvestment.com. You can read up all about LMI and how it works. But that would have been necessity for you in this regards, or you would have had to have gone and found another $50,000 to cover the shortfall.
Yeah.
Okay. So it worked for you. So from this property in Penrith, Principal Place Residence, you bought a unit. That's what you mentioned. 351. 1 year later. How did you sort of stump the cash up for that?
So that was like in the same Penrith. They were selling apartments there, and I was always thinking like buy a small commercial. So down the line, I might have to do some business or something. I can do that. I went there. They said, no, we're not selling commercial. If you want lease, we can give you, but we have these units. So I saw as the 351. I said it will definitely rent for 350 because I know the area. So that one was not educated much, but so 35. But I thought it's a good deal. Let's buy it. And after 2 years, settlement will happen. And I'll just gauge my risk and all. So money-wise, like I use the credit card balance transfer. 20,000 come from there.
Okay.
And 10,000 from a friend, which I was like paying little interest. And $5,000 I had.
Okay. So you've contracted for an off-the-plan property at 351 with a 2-year horizon to actually get the keys for it.
Yep.
Now, and you got the loan okay on it, no problems at all?
Yeah, and that was like in 16.
Yeah.
So that time I had the job and everything. So no problem with
Did you use a mortgage broker?
Yes.
Yeah, okay.
Yeah.
We'll touch on that in a moment. But so when it settled, the exchange in 2015, you settled in 2016?
16.
Yeah. And then you got a valuation then, did you?
Yeah, so what happened is I signed it, and after 6 months they had like, I was not knowing I'm buying in the first release, and they were like literally now there are 10 towers. So big development happening. I live there. And after 6 months, what happened is the same thing they sold officially for $420.
Okay.
And I said, wow, man, for $70,000 in 6 months. And my house price was also going up.
Yeah.
So I said, that blew my mind. I said, what I've done in India looks possible in Australia as well. I think this is where I need to learn, because this game is becoming very confusing. I can see I can make money.
So buying off the plan for you was a good experience. You made money off it.
Oh, it was lucky. I'll never do that. But
yeah, so you're lucky.
I was lucky, yeah.
Yeah, because you
100%.
normally hear other stories, right? But this is one of those stories where buying off the plan, you've timed it well, bit of luck maybe, a fair bit of risk, borrowing money off a friend and other stuff. So have you refinanced that property at all over the time?
So that one I sold actually in 18.
Yep.
So I sold for 467.
Okay.
So I kept for 1 year on rental. So the rent was, I think, 380 or something.
Was it rented the whole time, even though there was that many properties being built there?
And no, that's right. So there was like Morton who are like already helping with the settlement and all. So I used them. And literally, I think after 2-3 weeks, the property was, because it's a one bedder, so enough demand compared to 2 bedders. Like, like people are looking for cheaper and better. So I think we put it for, so property was rented out for the entire year, maybe 2-3 weeks initially might be vacant, but I don't remember that.
So you made $100,000, well, like gross, but then less costs and all that sort of stuff, right?
Sure.
So you're happy? You're happy?
Yeah.
Yeah. Okay. And then after that was Lithgow.
Yeah.
So you did as a JV, land sale division with a friend. So you bought a block of land with a friend and then cut it in half and you both built on it. Is that right?
Yeah. So my friend, he sold, and that was the plan to build.
Okay.
But I think serviceability was tight with him.
Yep.
So he sold his land.
Prior to building?
Okay. Yeah, without building, yeah. And I kept that land. And then after I bought another property where I renovated it and subdivided it.
Okay. Which property was that?
So this is in Bathurst.
Okay.
So I bought because now this subdivision worked for me, right? So I was very excited. I said and it was a lot of mindset game. Like even I don't, because that year, like my wife was not working. We had a daughter in end of 2015. So I said should I wait for 1 year while my wife goes back to work and we get the serviceability back, or I do something I can do? And I said, okay. So that's where subdivision, paper flicking worked. And when my wife went in, like toward the end of 16, we had the subsidy back.
Okay.
So she works with Westpac, full-time employee. And that's where I bought another property for $299, say $300K in Bathurst.
In Bathurst, yeah.
Yeah.
And that you just renovated it.
Yeah, renovated.
Yeah.
It was a good renovation. I spent $50,000.
Okay.
My first renovation.
Yeah.
150 kilometers travel from Penrith for, say, 6 to 8 weeks.
Did you do it yourself?
No, I had all the tradies,
Okay.
but I didn't do anything. But it's still my first thing with my full-time IT job. Hectic, but I wanted to get my hand dirty, and I said, I'm buying this cheap in a good location in the center of town. There's nothing to lose.
Yeah.
All I can make. And we did for 2 months. That rented out. Now it's renting out for $450 per week.
Okay. What sort of valuation do you reckon you'd have?
So we had right now it is around $450K, but that time I think after 6 months, because my mortgage broker said we have to wait for 6 months.
Yep.
That time it came at $410.
That's pretty good.
Yeah.
So you made sort of 110 grand on it, sort of just by doing 50K renovation. You
Yeah.
doubled your reno money, and now it's worth, more. Okay.
And then I came back to the Lithgow one land.
Yep.
And I built a house with Granny.
Okay.
So in that area, say everyone's saying, because generally everyone is building house, but I said I want cash flow.
Yeah.
And I want my money. So I said and I was knowing that with all this learning here and there, that affordability is a big challenge and people are looking for that nice accommodation. So I said, you know what, I'll build a house with Granny. So the entire project costed me around $460 with the land and construction and big learning as well. And that's renting out for around $630 right now.
Wow, combined. And what sort of valuation do you think?
Valuation, I think, especially in this hot market, I would say I'll sell it for $600 easily.
Okay. But you're just going to hold on to that now?
It's positive cash flow. This property is P&I covered for me.
Yeah.
And depreciation, all those is bonus. So
So you're just going to leave it there?
Yep.
Okay. And same with the property in Bathurst, just going to leave it there?
Yep.
Okay. And is that it? No more properties?
No, then we bought another one, again back in Lithgow.
Yep.
So this was in 2019. So I bought for $323 and it's renting for $330.
Yep.
And we have got the subdivision approval to build another 2 houses. So this is a 1,260 square meter. And I've got the subdivision approved, but we haven't executed it. But right now, I think it's been a year. The valuation came as $390.
Okay, so you're going to rip that house down, so split it, rip the house down, build 2 places on it? Is that the idea?
No, so we'll keep the house. So luckily the house is on the corner. And on the side, you can build 1 house and 1 on the back.
Okay.
And it is a corner block, so it's so no, we are not demolishing. And
Okay,
that's the
so
main
you
thing.
have 3 properties with
3
3 rental
properties.
on 3 titles?
3 titles, yes.
Okay. Sounds
So,
pretty good. Was
yeah.
that hard to find that property?
No, this was based on the relation with the agent.
Okay.
So literally the agent called me and said, Sanjeev. So to give you a background, Lithgow, before first property I bought it, I would have looked at 200 properties.
In Lithgow?
Because that was 100 kilometers. It's a lot of learning, right?
Did you drive up every Saturday or something? Did you?
Saturday, I'm so excited. Saturday morning.
Yeah.
I'll be going and literally coming in the evening, 5 o'clock.
Did you go by yourself or did you take the family?
No, just
by
myself.
yourself,
Yeah,
yeah.
because daughter was 2, and wife was taking care of the household things, everything. And I'll literally go and talk to the agent, look at the contract, dig into everything, pay good town planners to get those advices, what it means and what is the impact.
Yeah.
So before buying my first deal, I would have gone for literally 6 months and seen more than 200 contracts just to understand everything.
Crazy.
Otherwise, even you give me the good deal, I can't buy it.
You don't know value unless you know what value represents. And if you buy the first thing you think, you don't know whether there's value or not. So, but 200 though, that's a lot of that's a lot of research.
Yeah, because it's literally for me, it's what is in the title? What is this caveat? What is this? I have to understand, and everything has a meaning to it.
Yeah.
So it's and then I also feel what if this, that, and literally it happens, but then 3 months, 4 months, and I understood. Yeah. And when the deal came, literally for my subdivision, I didn't even contact the town planner because now I knew everything.
Yeah.
So it was more, as I said, learn the process. And that's where the energy came, even going for renovation. So again, learning. And so this one is again a 3. So this was again literally went on Monday. I got the email on Sunday from the agent, went on Monday. took a sick leave, seen the property, went to the council in Monday end, offer done, negotiated it, deal closed.
Good.
So,
And when do you start building, or you've built?
no, I've not built it. So I've got the land. I don't think
So you haven't executed the subdivision yet?
True.
So all right. So how much will it cost you to enact that?
So far, I've spent around $10,000 with the land surveyor just to get through the council and the few tweaks always. But I think subdivision might cost around 50, 60 grand just for the services.
Yep.
And then construction, we are looking around, say, 200 per boxes, which is like 3-bedroom, double bath, single garage. And rent will be around easily 400.
Each, that's 800 plus the other house, which
Plus
is probably
330, which is the old
330.
house. So it's like powerful, plus manufactured equity.
Yeah.
And then on the Bathurst one also I've got the build. So it's just like everything sorted out.
So everything really goes. So you've got all that sort of potential energy there to get stuck into. It's good.
Yeah.
Interesting stuff. Great story. So you're going to not buy anything else now before you actually go down the pathway of subdividing and building, or if another opportunity arrives, will you continue to do that? Keep banking land?
No, so keep banking, So I think this year I'm buying in August, like literally in July doing all the tax returns and everything. So I'm already getting ready for that. And August buy a similar deal. So my favorite is like 300 to 400 personally for myself because low risk. I can make enough money from these 300. So why to invest even 500?
Yeah, so that's not a bad strategy. And where will you be buying? Same area, do you think? Regional New South Wales? Do you like it?
Yeah. So as a business, I'm buying everywhere. A lot in like Bendigo area.
Okay. For you personally, where will you look, do you think? Same sort of areas? Depends.
Yeah, depends. Like say,
find.
I mean, the market is moving every day. But I think regional and Adelaide, I would say.
Okay. That's good. We're going to go a quick break. When we come back, let's talk about some of these hotspots back in a moment.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Sanjeev Sah. Now, let's talk locations, which we sort of touched on before the break, but something you mentioned earlier on in the chat, which I picked up on, you spent $150K on personal development. Like, is that real money, as in $150,000 you spent on improving your knowledge of stuff?
It's real. And this is like around 130 would be from the POIG income, which is like after paying tax.
Yeah, okay. All right. So that's a lot of money that, that's another couple of deposits for another couple of properties. So I just want to have a chat about that. Is the money well spent? You happy?
Yeah, 100%. Like, because my ROI, like, before 2015, like, you can't sell me a $10 book.
Yeah.
I mean, maybe yes.
So what's changed your attitude? Because that's like, there's a couple of MBAs there if you really wanted to do it, right? Like, why, how?
But this is like all, like, not paying for the MBA, but learning from like the best people who have done and really to surround with themselves. Because I was like going back to work and like similar stuff, like you go to the seminar, you learn things and like you go out and again dull.
Yeah.
Just paying to be in that energy. And then when I started taking action, I can see the ROI. My first like course was like $12,000.
Who was that with?
It's Dimfna, like I Love Real Estate.
Yeah.
So I went to a free seminar. I signed up till $12,000. And now I learned so many about subdivision, renovation, everything.
Okay.
So it's like no brainer. Like, and that's where I started. So like for renovation, I spent with Sherry Barber. She's the best.
Yeah.
So it's all those kind of for development.
So you say, how much do you spend with Tony Robbins stuff?
Tony Robbins, I would have spent around 30 grand.
Okay. And how did you find that?
Was good. I think a few bits I haven't done. Like say, I started with the 4 days first one is called. So that is like locally. And then in 2019, I went to Fiji for 7 days.
Okay.
So that's like from world, like around 105 people were there. And it's like wealth and health mastery, learn about so many things, so much networking. and then business mastery, which happens in US.
Yeah.
So that's still pending for me because of the COVID.
Yeah.
Can't plan, but like did with destiny. So like I literally bought everything. So it's like if I can learn one thing and execute, like now there's like self-education has changed me, because if you look at like I worked in IT for 15 years and 10 years was like, you can't even sell me $10 book. I will say no.
Now you're happy to spend the money on education. Okay, I think education is absolutely critical. I guess to the top of the introduction to this podcast, how I use this as my own mechanism for education. So, for $150,000, that's big bananas. I'm happy that you found that a good investment. That's important.
Yeah, but it's important, like finding the right and
because I've heard a lot of people spend that sort of money and just go, I've just blown it all away.
True.
But you need to invest in your education. But investing in your education, just to be clear, doesn't necessarily always mean you got to pay for it. So you've probably listened to a lot of podcasts.
Yes.
In the past as well, right? I like
yes.
Good free education.
Yeah, a lot of podcasts.
Yeah, that's cool. So tell me about Investor's Dream. So you're not in IT anymore.
Yep.
Now you're using this skill set and this education that you've had to support other people invest in property. So you're a buyer's agent, is that correct?
True.
Yeah. Okay. So how's it going? It's good?
No, it's good.
Yeah.
It's good. I started officially in June 2019.
Okay.
So I quit my job from literally 1st April. So I took extended leave for 2-3 months. And then after getting my bonus, I resigned in May, I think.
Okay.
And that's where, even though I started investing from 1st of April in 19, officially it went in June, where I updated my profile. And so I think before that, I was already helping investors from all this property community you mentioned, right?
Yeah.
People are investing in education, but that doesn't guarantee taking action and the results. So those people are seeing my results because of sharing my knowledge and all those things, like how I'm doing the deals within the community.
Yeah.
And I had good followers, and like they were always reaching out to me. Can you show your deal? How you're doing? So I said, no, it's easy. It's just like same education we all have gone through. It's just like putting the work, right? So I think from there I was already helping people beforehand, but
so now you're just doing it on a full basis. So what's your website?
investorsdream.com.au.
Okay, that's cool. Guess it's your dream you've realised, isn't it?
Yeah.
So did you ever think that you'd be in property as a profession?
Yeah, so after learning all those things and seeing good results, right, what happened in 2015, I set a goal that in 5 years' time, I should be able to quit my job and become a full-time investor. So that was something, and again, it was based on my why also, because I can't spend much time with my daughter, can't travel to India much often. So those things, and you can see that other investors doing it and making a lot of money. So, and it's working for me as well. So why I'll be like working hard somewhere with something I enjoy also. I was putting energy. So I set a goal for like 2020.
Yeah.
I should be able to become a full-time investor and like really planning, working every single day. And it happened in 3.5 years.
And I think probably 4 or 5 times in this chat, you've sort of spoken about, you refer to it as my why, and you just did it then, it's my why. And I'll probably close just with this, just conscious of the time. You keep talking about your why, and what is this your sort of barometer for why you're doing stuff? This concept of a why, where'd you come up with that?
I don't know. I mean, I was learning as well that people always used to say that have goals, but then ask yourself, what is your why you're doing? Because that will give you the energy. And unless you're clear, it's not going to happen. Like, what is why? I'm even not writing goals. But when I started writing goals, I realized that. But why? Actually, it came automatically to me. Because I used to drop my daughter in the for the childcare, and sometimes she's not well, crying, and like I'm really rushing for my job and travel 1 hour every day, one way. And I used to really feel bad.
Yeah.
And I said, man, this is not acceptable to me. And when I see the property opportunity and other people doing, so I said, no, I'm going hard. And that's where all my fear gone. Like even like in renovation, people say advisable is you do renovation within 50 kilometers. But I took 150 kilometers. I said like, no, I'm going hard for it. I don't have money. I have to manufacture that. And I want to buy like at least 5 properties in the next 5 years and learn all I can. And the best is to just do it, learn as much as and do it. So, and that's what I did. And I got good results. Like literally in this property, we have got like close to $1 million in equity. So it's
brilliant. Great story, Sanjeev. Thanks so much for coming and sharing it with us. It's really nice to meet. I've seen your sort of name floating around in the social media and all that sort of stuff, so it's nice to get together. And make sure you stay in touch, mate. Let us know how you're getting on. It's a great journey.
Thank you so much, Philip.
Yeah, thanks for joining me today. Hope you enjoyed that, everyone. Can you please, I'm getting a lot of questions at the moment, so please keep them coming. We're going to do a Q&A session at some point. Maybe we can even get Sanjeev on and he can answer some listeners' questions or readers' questions. You can type them in also into the field at smartpropertyinvestment.com.au, and we'll start getting those questions answered. You can email editor@smartpropertyinvestment.com.au. DM, direct messages on social media. Smart Property HQ is where you'll track us down. And there's been some really cool reviews coming in on the podcast players, platforms that you listen to this on, including the iTunes one, which the team here get a real kick out of. So just a favour for me, if you like what we're doing with this and enjoying these stories, just leave us a couple of notes there about what you reckon. In any way we can improve it. We're always happy to think differently and do these things differently. But that's quite a long podcast for this week. But it's good to see Sanjeev in the studio and have a chat. We'll get him back again soon. Until next time, we'll see you then. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.